Lesson 2, How to Find the Trend. In this lesson, you will learn how to find the trend of the current market on different time frames. So let's go to Thinkorswim, okay? As you can see, there can be multiple different time frames, okay? And trends are going to vary based on the time frames of how easily or how hard they are. Some of it is subjective, okay, because trends can be very micro all the way to very macro. And let's start off with the very macro side of it. Let's go and let's look at a 20-year monthly trend of the Eminis. Okay, as you can see, price rallies, right? We fall, price rallies, we fall, price rallies, right? But so we could kind of look at it a few different ways. So we could say, here's a low, here's a high, here's a higher low than this low, here's a lower high, okay, or about the same, but I believe it's a little lower. This high right here is actually lower than this high, okay? So what you've made is you made a low, a high, a higher low, but a lower high, right? And then you actually made a lower low because this low is set different from this low, okay? It is actually lower from this low. But then we actually have a higher high. Okay, that's one way of looking at a trend. So on the big picture, what's happening over the last few years is we've made a high, a low, and a higher high. So any type of pullback, right, would potentially be a higher low unless we breach this by 1 penny. That's all it takes. If it comes back down to the exact same price, that is not a higher low, or sorry, a lower low, right? It would be what's called a double bottom. But let's break this down a little more, right? We could say, look, we have a low here, a high here, a higher low, a higher high, higher low, higher high, higher low, higher high, higher low, higher high. Okay? But then look at this. We've now made a lower low based off of this past low, right? So, and at the same time, we've been making a lower high than this high, right? So as price pulls back, we go back up. So everything is subjective to what's a low, what's a high. But I'm going to kind of break this down to the smaller time frame, so it's going to be a lot easier for you to actually kind of see and understand. So let's now go to a 1-year chart. Okay? And here with the 1-year chart, we actually have a low right here. Okay? And then price rallies, we could say we have a high here. And then price pulls back, right? And then we rally and we make a higher high. Okay? So by making this higher high, it now confirms that this is a higher low. But then we make a low, okay? But we still haven't breached this. We rally, we make a lower high, and then the second we break below this low, it is now considered a lower low. Okay? And then we make a double top, it appears, right? And then the double bottom, and then guess what? Price rallies higher. And then we make a high, and then we start the whole cycle all over again, right? So let's now break this down onto an even smaller time frame. And let's go to a 15-minute chart. Okay? And what we're going to look at is we're going to just kind of zoom in to this area right here. Okay? And as you could see, so price is kind of starting to fall where we're making lower highs, lower lows, right? And then right here, we actually make a low. We break down from this entire support level, right? We make a low, and now we make a high. So we now kind of have two anchor points, okay? Then the second we break down, and let's do this. The second we break this level right here, okay, with price. So we now have a defined high and a defined low. Okay, the minute we break below this low, and let's say this is all that we see up to this point right here, okay? This is all that we see. The minute we break above or we break below this low, then everything changes, right? Because if we break below this low, then this now becomes a low or a lower high than this high. Okay? So as price, and we'll kind of fast forward time, we come right down to it, right? Let me move this. Okay, so this is the line in the sand, 2063, right? The minute we break below this low, this now becomes a secure high. Okay, so we know that for later on, and we're going to know that's going to be a reference point later on, maybe a couple days, couple weeks, couple months. But price is going to have to break above that to reverse the trend back to the upside, okay? So now we actually have, is we're making a new low. This is the highest point, correct? Once we've made this low. So what we're going to do is we're going to draw a line knowing this is now a high, okay, as we're making a new low. So then price will fall and we start to rally, okay? Well, now we have what's called a swing low. It's something that we could identify with, right? We could say, hey, that's a swing low. The minute this low gets taken out, then the previous high there is actually now going to be that lower high, right? Unless this gets taken down, this becomes the low. So as price kind of rallies, right? We break the low right here on this candle. Well, guess what? This low right here, or sorry, this high is now the new higher low. Okay, so as you could see, a lot of times what prices can do is when it makes a new low, it's called back and fill. Okay, and what it's going to do is it's going to come back and retest old support becomes new resistance and vice versa. Okay, so as price falls, okay, it wants to come back, retest where the previous low was or the high, and it's called back and fill. And what it's going to do mainly is it's going to just kind of go back, retest that level to make sure there are sellers, and then it'll continue its momentum back to the downside if it's in a downtrend. So as you can see, we kind of make a new low here, then we rally. Okay, so right here is where the high is, right? But this low needs to be taken out before we could draw a line here. And price makes a low, so now we could draw a trend line right here. Okay, and you just kind of keep going over and over, right? We made the new low here, and then this is the new high, right? And so on and so on. Okay, and then it just keeps going, right? But these are going to be all reference points later on, okay, on the way back up. And this is one of the things, right? So look at this price, this high, right? We have a low, a high, we fail, but look, we come right back up to it, and then we fail back again. So now we have a low here. Okay, and then is the second we make the new low, guess what? This is now our lower high. And price just keeps going and doing the same routine, right? So remember, we're looking to day trade and scalp the market. So what we're looking for is when we see price make a new low, okay, what we're looking for is we're looking for the retracement to get short, and then we could follow the trend, because what we're doing is, do we really want to get short here? No, we want it to retrace. We know where our stop losses can be, because if it breaks above its previous high, then we know the trend is different, right? It's now in an uptrend versus a downtrend. So on the retracement is where we want to look to enter for the short to continue the trend. One problem most traders have is they see the breakdown and they think too much, and then they start to short that breakdown, right? Or you could play the breakdown, but the problem with the breakdown a lot of times is sometimes it'll fake out, right? So like right here, it faked out by 1 or 2 ticks, and then it reversed, but guess what? It never took out this high. And then traders will panic, or their stops are too wide. What we're doing is we're just trying to find the best location to enter, right? So as you can see, we have a low here, then the bounce, right? The bounce is all the way back up to this low. Old support, right? This is support, becomes new resistance, and then we fail, come back, right? So you want to look to short on that failure, back up. If it breaks above 200675, we know that's where our stop is, because it'll actually break trend back to the upside. Okay, and price just keeps doing this over and over. But now it's going to start to get interesting, right? Because if you look, we have a low here, a high here, a low here, a high here, right? Now we make a new low right here. Then price breaks above, right? But this is a low we broke down, but then this is where our swing high is, right? Well, look what happened right here. We actually broke above this high. Okay, it's the first time since I've been showing you this trend where price is broken above. Okay, but the other thing I want you to see is how I drew all these trend lines with all these little, you could call them table tops, right? It's kind of like price will sit on the table and then it'll fall through the table. Well, as it comes back up, that table is going to act as a resistance level, right? So price fails, right? We kind of see a low here, a pullback, or actually a high here, a pullback, and then we make a high, right? So this is kind of, now we're starting to see higher highs and higher lows, right? And then price came right back here, and then let's see what happens. Price came right back down to this low and bounced, okay? But then it fell through and made a new low, okay? Now, this is a very choppy market that's happening right now, but as you could see, we made a high or a low here, is we're starting to rally, right? So this low is a confirmed low, right? The second we take out this high right here, because it's the highest point, correct? We kind of pull back, make a high, fail, and then we've made a low. But look at how price comes right back to all these lines and stalls. Maybe it's for a couple ticks, a couple points, but usually it's always going to stall for a little bit, okay? And then watch what price does. Here's another one, right? Comes right to and then pulls back. These are great scalping techniques, okay? And then we kind of make a new low. Price comes back up, right? But now, if price breaks above this high right here, these candles, then this now becomes a secure low. Boom, right? So now, what's the trend? Instead of we're no longer looking for lower lows and lower highs, we're now looking for higher highs and higher lows, correct? So we kind of have a low here, a high here, a low, but this high, once we break above this high by one tick, that's all it takes is one tick, then this now becomes a secure low. Okay, and price, so now, what's our objective? Our objective is to look for a pullback to be a buyer, and we know our stop is going to go right below here. But look at what happened. We just made a new high, right? Right here, and look at where price stopped, right at these levels. Again, I'm not doing anything specific. All I'm doing is I'm drawing lines, price levels, okay, of highs and lows. And look at how price reacts to them at all these levels. It'll go right to it, stop, turn around, and pull back. Okay? And we're just kind of looking at this more on a little micro time frame, right? And look at how well old support, right? This low, we came right back, but guess what? We never breached these lows. So if price makes a new high above these candles, what happens? This now becomes a secure low. Okay? And we know that's the low. So maybe we want to buy here looking for the continuation of the uptrend, right? We want price to keep moving higher. So we know our stop loss, okay? If you put your candle over, or sorry, your mouse over the candle, up in these levels, right above my cursor right here, okay, you'll actually see the range, the price, and all that. So what happens is I can put my mouse on the screen candle. I know the low is 1921.25. So I can enter maybe in 1932, and I know my stop is there. So I'm risking 7 points, but watch what the potential upside is, right? But here's the thing. Price now made a new low, right? It finally broke, so now we're starting the downtrend again. But look at how well it goes right to all these trend lines, right? This low acted as support way back, way over in time. So always look to the left of your chart. This swing low, we breached it by one tick, right? Couple ticks. And then right here is now our new swing high, right? Because this is the highest point. And now look at this. We have a low here, a swing high here, right? So which way's the trend? The trend's now back to the downside. Okay? Until this 1879.25 gets broken to the upside, this is what we're playing, right? So do you want to get long or short here? Okay, you don't want to get short until we break above this, and then hopefully we can pull back, right? And then we know exactly where our stop is. Because if we get long without the confirmation of it, then we can actually get hurt. So what happens is, look at price, stall, boom. On this candle right here, we finally broke above. So this is now a secure low. And then look at this. We now have these two guys as lows, right? And watch what price does, right? So once we make a new high, maybe on any pullback or right above the break, you could look to get long, and price just watch what price does, right? And so here, and again, look at how well price, all we did, you saw me draw all these trend lines on the lows, right? We bounce to the low, we go up, we fail. Well, guess what? As price goes back to retrace, back to the upside, all those levels are now acting as support and resistance levels, okay? And look at this. We ran right up here. Well, this was this swing low right here, okay? This high was this support level, right? Old support becomes new resistance. The very first touch, and then we pull back, right? And so on and so on. So again, not to get too complicated, but this is more on a smaller micro time frame. I mean, we're on a 15-minute chart. We could go all the way down to 512 tick chart, okay? And we won't see these as clear potentially, right? But what we can see, because actually we'll actually see them a lot cleaner on a 512 tick chart. The problem is you're going to get whipsawed a lot more than on the 15-minute, okay? So when you're looking at trends, the easiest is going to be the bigger time frame. As you start getting to smaller and smaller time frames, they're going to give you, it's going to get a lot more choppy, and you could get shaken out of trades a lot more, okay? But at the same time, you could see we made a low here, a high here, right? We just look at lows. We made a higher high, right? Higher low, higher high, higher low. Or sorry, higher high, higher low, and so on, right? And then you start to kind of go to the downtrend, okay? And as you start doing the downtrend, now you're seeing it, and then it reverses, okay? And then all of a sudden, you have a high here, a major low. So it's all perception. How do you want to look? Do you want to look at the real small moves or just kind of the bigger moves, right? Because look at this move all the way up. Okay, here, and let's erase all these lines. And if you actually look real quick before I erase all these lines, look at how well price acted, even at all these lines that I drew back from a couple days ago, right? They all still work. Price comes right to it, pulls back, comes down, bounces, right? Comes right down to it, to the tick, and bounces. And these are lines that I drew from a couple days ago, right? That you were watching me as we were making lower highs and lower lows. So with that being said, even this one, this 1950, right? It's the very first time it got touched, and look at what happened. We went right to it and then pulled back, and you could have picked up about 9 points on this, okay? It's about $450. All you had to do was put your order here and maybe give it 1 or 2 points worth of risk. Okay? So so right above we have 1962.50, right? Would you want to be a seller right there? Yeah, because I know all these lines are pretty much working. Now 1950 we blew right through right here, right? So, but with that being said, it just comes kind of, this is aftermarket, it's not regular trading hours right now, so there's gonna be things. But let's remove all these drawings. Okay, and let's now look at, let's go back to that 15-minute chart. Okay, if we just draw simple trend lines, okay, if we draw a trend line just connecting highs, okay, we'll actually see where price reverses from, right? And a lot of these trends, okay, right here, it just follows. Every time it comes back, it touches and it fails. Touch and fail, right? And then it finally breaks out. Well, now you have a reversal of a trend. Look at this, right? We touch. So now we rally, we pull back, rally, pull back, come down, ride it, fall. Now we're on the backside, and then we fail, right? So you could come over here, draw this trend line to here, and look at how price stopped exactly at that level. Okay, this is just a quick description of drawing trend lines to help you figure out if we're in a downtrend or an uptrend too, because as we saw, you could look very small or you could expand it. So that's lesson number 2 on looking for the trend. Next up will be lesson number 3.